quickly shifting focus and talking about what's happening at Syngene International. Jonathan Hunt, the MD and CEO, joins us on the show. Jonathan, hi. Good to be speaking with you. Well, you did guide that second half of the year is going to be strong, but after this, weakish Q1, should we assume that Q2 will be on similar lines? Because what's giving you the confidence about second half of the year, I wonder?
Yeah, sure. I think your question covers most of our guidance. It looks like we got that right in terms of predicting the shape of the year. I think the first half of the year will be flattish, and that predicts then if we've had a flat first quarter, the second quarter will look similar. It's interesting though, if you start to then take it apart, you should see sequential quarter-on-quarter improvement on all of the lines. So a little bit of an acceleration through the year. But I think the growth, particularly on revenue, will be second half weighted. And the reason for that is the external factors. If you try and take apart what's going on in the marketplace, US biotechs had a tough 18 months around capital raising, getting new capital flows in. That started to recover at the back end of last year and has had a good start to this year. So the amount of new capital flowing into biotech companies, their new fundraisings, looks to be back at pre-pandemic levels, and it's been like that for about 6-7 months. So you're starting to feel that it's stable and normalizing. Of course, raising new money is not the same thing as spending it with organizations like us. There's a time lag and a flow through, and that's why we're predicting that doesn't happen until the second half of this year for us. The money they've raised over the last 3 and 6 months, they should be starting to spend on projects and research and development work with us in the second half of this financial year. So that gives you a sense of why we think softer first half, low growth or flat year-over-year performance in quarter one, quarter two of this financial year, and then a strong exit to the year with a strong second half.
Jonathan, so would you be keeping the guidance intact on all the parameters, margins, top line, profits?
You could see a little bit of a sequential improvement, but the key bit is to go back to the full year guidance, which is that we think the EBITDA margins for the full year will be largely in line with last year's, and that predicts for somewhere in the high 20s. So we did 22% EBITDA margin in this first quarter. If we're going to do high 20s for the full year, the only way you can do that is sequentially to get better and to see some operating leverage through the year. Some of it's also just a mix effect between our various businesses. We're simplistically, we're a research services business and a manufacturing CDMO business. And I think it's the mix between those two in any given quarter is the strongest driver of that effect. But yeah, we're sticking to our guidance. The first quarter turned out in line with our predictions. That gives me some confidence that at least our predictions and our understanding of what's going on in the market is turning out to be accurate. Flattish for the first half, rebound with growth in the second half, and then you can predict what happens with operating leverage through the P&L throughout the year.
Jonathan, you did indicate that US biotech R&D funding is showing signs of recovery, but is it taking longer than you would have earlier anticipated?
No, I think the first quarter cemented in the view that it is recovering. So it was a pretty good capital raise in the US in the first quarter. The number I saw was about $23 billion of new capital inflows going into biotech. That's back to pre-pandemic levels. So that's getting to be a second quarter in a row where it's looked good. And now we expect that to flow through into expenditure and increasing demand. But 6 months lead time is about what we'd expect on that. So the money people have raised in this quarter, they'll be spending in the second half of the year.
Jonathan, you've mentioned that the second half of the year would be when your Stelis facility is getting ready. What sort of utilization numbers can we expect initially to start off with, and then the improvement timeline?
No, we haven't guided on that. I mean, for now, we're still in the sort of the operational bit of investing, upgrading going through the various qualification processes that are needed. So that facility by the end of this financial year will be ready for operations, ready to be shown to clients. We'll start the process of then selling the capacity. But it was much more of a strategic decision. You know, we were running a risk that we would slow our growth because we were running out of capacity. We'd pretty much pre-sold 100% of our available infrastructure with the various deals that we've done in biologics. And therefore we had a real risk of turning clients away just because we would run out of capacity for them. That prompted the decision to do an acquisition. We brought that capacity expansion forward by a couple of years compared to the alternative, which was an organic build out, and that then gives us headroom. So we're in a good position now that we can serve our clients from the end of this financial year should they want to bring work to us, and that then gives us that headroom for future growth.
Okay, Jonathan, just before we let you go, a quick word on the Mangalore API facility, because recently we've not heard any order wins from that facility. Why is that? And is there something in the pipeline that we should be hearing about soon?
Well, we're out there. The sales team are taking lots of meetings, working hard. I'll update you, as we see those opportunities come through into sales and into new revenue. But the facility itself's in good order. It passed its FDA inspection last year. That was a key enabler for the sales process to get out there and be able to show that it was a regulatory validated manufacturing plant. So we're in reasonable shape for that. Actually, the overall manufacturing strategy, the CDMO part of our business, remember, it's not only small molecules, it's small and large molecules combined is the strategy, and it's really been led very well with our biologics business.
All right, Jonathan, we'll let you go on that one. Thanks so much for joining us, and good luck for coming quarters.
If you like this video, then like, share and subscribe to ET Now.